Hello and welcome. In this short explainer, we're going to break down a really fundamental tool for business strategy, something called the Ansoff Growth Matrix. All right, let's start with a big, fundamental question. It's a question that every single business has to answer, whether it's a tiny startup just getting off the ground or a massive global corporation. And that question is, how do you actually grow? Well, the good news is we're not left to guess. There's a really powerful and, honestly, time-tested framework out there that helps leaders figure this out. And, yep, you guessed it, it's called the Ansoff Matrix. So this matrix was developed way back in 1957 by a strategist named Igor Ansoff. And what it does is give us a super clear, really structured way to think about all the different ways a business can grow. You might also hear it called the Product Market Growth Matrix, and that name actually gives you a big clue about its two core components. Okay, so here's how it works. The matrix is built on two really simple ideas, your products and your markets. You just ask two questions. Are we talking about our existing products, or are we developing new ones? And are we targeting our existing market, or are we going after a new one? When you cross these two dimensions, you get four clear, very distinct strategies for growth. All right, so let's dive in and take a look at these four paths. We're going to walk through each one, and for each strategy, we'll see what it means and then look at a real-world company that's using it. First up, we have market penetration. This is probably the most common strategy, and it's pretty straightforward. It's all about selling more of your current products to your current customers. You're basically doubling down on what you're already good at. So how do companies actually do this? Well, it's usually about grabbing a bigger piece of the pie from your competitors. You might see them ramp up their marketing, offer special promotions, maybe lower their prices for a bit, or just make their products easier to find. The goal is to make their product the obvious choice. A perfect example of this is McDonald's. For decades, they have been the absolute masters of market penetration. They are laser-focused on getting more and more business from the markets where they're already a huge player. Think about it. They're always running limited-time promotions, right? Like special meal deals or bringing back a fan favorite. And they're always trying to make the restaurant experience better. All of this is designed to get their existing customers to come in more often and spend more money. Okay, on to our second path, market development. This one's about taking the products you already have and finding brand new customers for them. So, same product, totally new market. Yeah, the whole idea here is to find new groups of people to buy the stuff you already make. This could be as big as expanding into a whole new country, or it could be something like targeting a new demographic, a different age group that you haven't really focused on before. A really fantastic example of this is Apple. Just think about their strategic move to enter the Chinese market. It was a decision that completely changed the game for them. See, Apple already had the iPhone, right? It was a massive success. But by taking that existing product and introducing it to the enormous untapped market in China, they were able to reach millions upon millions of new customers. It was a huge, huge driver of their growth. All right, strategy number 3 is product development. And this one basically flips the last one around. This time, you're creating new products for the customers you already have. The question here is, we know our customers, we know they like us, what else can we create for them? This strategy is all about innovation. It's about figuring out what your current customers will need next and creating it for them. Now, this isn't easy. It usually means a big investment in R&D to come up with those new ideas and stay ahead of the competition. When you think of a company that's a master of this, Google has to come to mind. They have literally built an empire by constantly creating new stuff for their existing users. They started as just a search engine, right? But they didn't stop there. They gave us Gmail, then Google Maps, then Google Assistant, all of these new products and services that keep their users completely hooked into the Google ecosystem. And that brings us to our fourth and final path, diversification. This is the big one. It's when a company develops a new product and tries to sell it in a new market. You're dealing with a new product and new customers at the same time. As you can probably guess, this is definitely the riskiest strategy of them all. Now, diversification can be related, meaning the new thing is still kind of connected to what the company already does, or it can be unrelated, where it's a completely different field. It's a classic high-risk, high-reward situation. It's a huge leap into the unknown, but if it pays off, it can open up entirely new ways for the company to make money. The textbook example of diversification has to be the Virgin Group, Richard Branson's company. They're famous for this kind of thing, especially unrelated diversification. It started as a single record store. From there, the Virgin brand branched out into airlines, mobile phones, banks, and now even space travel. This strategy is what allowed them to build so many different businesses that aren't dependent on each other, so they're not putting all their eggs in one basket.
Okay, so that's the theory behind the 4 quadrants. But how does a company actually use this thing to make smart decisions?
Well, it boils down to a pretty straightforward 3-step process. First, you assess. You have to take an honest look at where you are right now, your products, your markets, your strengths. Then you evaluate. You brainstorm ideas for all 4 of those quadrants and really analyze the risks and potential rewards for each one. And finally, you execute. You pick the best path forward, create a solid plan, and make it happen. Because, a great strategy is worthless without great execution. So, at the end of the day, the real power of the Ansoff Matrix is just how much clarity it brings to the table. It gives you a simple but powerful structure for thinking about growth. And once you really get these 4 paths, penetration, market development, product development, and diversification, you'll start to see them everywhere. So here's a little homework for you. Think about your favorite company. Which of these 4 growth paths do you see them following right now?